Welcome to The Gamble and the Glory, where we hear founders tell the story of growing their companies to become industry leaders within the sports betting, fantasy, and iGaming industry. The Gamble and the Glory is presented by Segev LLP, a full solutions law firm purpose-built for the gaming and betting industry. With decades of experience and a truly global reach, Segev LLP is your go-to expert for legal solutions for all challenges commonly faced by companies from every industry vertical, including payments, blockchain, esports, affiliates, data, and more. If you need help with private equity funding, public markets financing, licensing, intellectual property, mergers and acquisitions, commercial deals, or other business needs, this is your team and it's what they do. Whether you're just getting started or have already scaled to become a stalwart of the industry, discover how Segev LLP can add value to your business and help you achieve your goals. Learn more at www.segev.ca. All right, we are back here on The Gamble and the Glory, where we talk to founders of companies in the real money gaming industry that have scaled their businesses to become industry leaders. And I'm super pumped to welcome today's guest, who arguably has built the leading esports betting brand in the space. Fellow Canadian Steven Salz is here with me. Steven, it's been a little while, man. How you keeping?
Good, yeah. Thanks for having me on. Appreciate it. How are you?
Doing well, thanks. Yeah, lazy days of summer over here, but no slowdown in the work schedule. So yeah, keeping busy. Things are good. I was supposed to see you last month in Toronto at the Canadian Gaming Summit. I moderated the panel there, which we'll talk about in a few minutes, but you unfortunately had to bail last minute sick. We missed you out there. Glad we could reconnect here today. As I alluded to, it's been a little while, maybe history and context for the audience here. Obviously, people know you as the co-founder and CEO of Rivalry, but you and I crossed paths super early on in your Rivalry journey. I was still working at Pinnacle at the time. My memory, and I don't know if this tracks with yours, I think we sat in a meeting and met for the first time in the lounge at the Wynn in Las Vegas. I was there with my boss, Paris Smith at Pinnacle. You were with, I believe, your co-founder, also named Steve.
Yeah, older guy.
Right. I don't know when that was. I'll have that at like 2017, 2018 or something like that.
Yeah, probably 2017, 2018. Because I remember you came into our office also in Toronto. I remember which office it was. We were in that office from 2018 to like 2019, basically. So it was somewhere in that range for sure.
When I was living in Curacao working for Pinnacle, I would pass through Toronto a lot, which was the connector between the west coast of Canada here and Curacao. So I would always stop in Toronto for a day or two. And to your point, stopped in to visit you guys. I think you guys had just moved into that office at that time, like that week or something like that. It was pretty skeletal and minimalist inside at the time.
That was our first office after we moved out of my co-founder's basement, which was in Chinatown in Toronto. It was a basement startup setup for sure. Yeah, that was a small upgrade, definitely. But we were only there for a year and a half, 2 years, and then we moved on from there.
Well, let's just stick with that period of time to get us started here in our conversation today. People are very familiar with what Rivalry's up to now. And you're no stranger to podcasts, but I actually personally haven't heard the full arc of the origin story. So I'd love to just start there and rewind the tape a little bit, have you tell from your perspective through your memory, kind of what the genesis was of Rivalry. Comparing my notes back then, memory's hazy now, but I don't actually know if being an esports operator was the original plan you guys had. I might be wrong about that, but fill in some gaps there, Steven. Let's spend a few minutes just having you take us and the audience through the origins of it, going from 0 to 1.
Yeah, so I was at the time before I met my co-founders, which were, one of them was, the guy who went to Toronto and heads the Chinatown thing. We started, the others in Ohio. His name's Kevin. The one in Toronto's name is Ryan. Before that, I was working in capital markets, so just was working in investment banking. I was doing equity research. I actually covered some gaming companies at the time, like online gaming companies, none of the big ones, but some of the smaller ones at the time in B2B providers. I remember one was NYX Gaming. I was also in and around what was happening in the video game space. What had started in 2012 was Valve, who's the publisher of 2 of the 3 largest esports, Counter-Strike and Dota. They released an update in 2012 called the Arms Deal Update, which allowed players to transact in-game items or what they called skins with each other. And that created really quickly a multi-billion, highly liquid community marketplace within the platform. Steam itself had been playing games my whole life. And in 2015, I was starting to trade skins. So what quickly happened after 2012 is the challenge with the community marketplace for buying and selling skins is once you could get a skin that somebody would pay you $100 for, even $500 for back then, and you'd have $500 or something in your Steam account, like the marketplace account, and you aren't allowed to withdraw because it's not a bank. It doesn't let you withdraw money. So you can only put the $500 you were lucky to get some skin, say rare skin, sold to somebody for $500. You couldn't remove it from the marketplace, but people very quickly figured out a way to have many external skins marketplaces where you could transact. All the transactions would still occur within the video game publisher-owned marketplace. But the third-party marketplaces, to just explain it simply, would just act like an escrow service where they would be like another player in the marketplace. You would trade your item to them. It would show up on this third-party marketplace. That was becoming like a really big business. And I was like trading. I was buying and selling skins, basically. And it reminded me of stocks and equities, which is now what I was doing for a living. 2016, I go to the other Steve, the one you mentioned earlier, who was the guy running that investment bank, and said, hey, we should look at maybe investing in one of these skins marketplaces. It's like a really interesting business. 10% commission in and out. It's way less efficient than equity markets, and this might be something we should explore. So one of the bigger ones at the time was the loot market, and I was transacting on that myself, and then we met the co-founders behind that, which was Ryan and Kevin, who became the co-founders of Rivalry. One of them, Ryan, happened to be in Toronto. We became friends. This is like 2016. They had more of a software engineering serial entrepreneur background, which meshed well with my own and the other Steves in terms of like just the skill sets. We then actually thought at first we would build a investment fund for gaming and esports, because we're like, all right, this skins marketplace thing is interesting. There's lots of other things around it that are interesting. It was clear that esports at the time was burgeoning, and there was some inflection point where the audience was going from a parent's credit card basically to their own income. They'd hit that kind of crossover point at an age of, okay, there's more spending power. There's going to be more things coming out of this, more revenue to be generated. So maybe let's just take all of our expertise. We'll continue to grow the loot market business, and we'll invest in other stuff happening in gaming and esports. That did take us long to then validate that for a variety of different reasons, that we felt the best way to participate in this like emerging demographic coming into spending power, and potentially being interested in gaming and esports as well, to determine that online gambling with a initial focus or a top of funnel acquisition point being esports and gaming, which we understood well. And again, we had the co-founders that had built something successful in it already. Okay, this is going to be it. We thought we would invest in somebody else doing it at the time, because we did think we'd be the operator. The only one at the time was a unicorn, which I'm sure you remember, and many of us remember. We're like, no, we don't want to. If there's only one player, there's room, and you know what? We've got a team of engineers. We could probably do this ourselves. We were definitely naive into what it would take to become a regulated online gambling business. But yeah, and then that was the genesis of it. Then 2017, we started going for an Isle of Man license to be our first license, building the product from scratch, all that kind of stuff. And then we did launch in like late 2018 as an initial esports top of funnel, which was a demographic play, just saying, hey, there's this whole demographic again coming into these types of consumer experiences. We think internet culture being so rooted in gaming and esports being the competitive piece of it, and therefore thing people bet on, is going to be a low cost of customer acquisition funnel for us to get started in this online gambling business in a place that we really understand. And then, so yeah, Rivalry did start off therefore as esports betting focused, but it was, as I remember saying back all the way back then, before we even got the license all the way till today, we always leveraged it as a demographic top of funnel, and that was like the initiation point for Rivalry.
Yeah, that rings true. Again, my time at Pinnacle around those years, you kept in close contact with us at Pinnacle, and actually did a partnership on the product side where I believe Pinnacle was provisioning its esports product. You guys were basically repackaging, reselling it effectively through Rivalry. It was a very intriguing thesis at the time, your point around it being basically a demographic play. And obviously at Pinnacle, for its B2C business, we were trying to do the same thing, albeit with much more limited success, admittedly, at the time. So there's a lot of challenges there, but I always found the thesis very intriguing. I guess let's pick up there, Steven, and talk a little bit about the actual launch. Rivalry launches, you guys are in market. I'm interested in maybe having you explain a little bit about the journey to product market fit. Like, you launched with this thesis. I understand you guys got a lot of traction, particularly in LATAM in the early days, where obviously it's still a big part of your business. Talk about the journey to product market fit. How did you know you had reached it? What were the markers along the road that sort of had you feeling validated that you guys were on the right path with that thesis?
Yeah, I don't know if this was the right one. Maybe at the time, looking back, we did consider cost of customer acquisition, though, to be it, and how cheap we could get customers. Obviously, retention rates after that. One of the things that was interesting is many of us didn't come from online gambling, as it was none of the founders had built in online gambling before, although we certainly now have many people in the business that have worked at other places. So we've absorbed a lot of information, but at the time, we actually did not know what a typical cost of customer acquisition was. Cost of customer acquisition was within online gambling. We didn't fully appreciate or understand how other people were doing it in terms of the affiliate businesses and everything like that being so big. We didn't know what retention rates were. My co-founders were coming from more consumer products. So when we first started building Rivalry, the way that we targeted our cost of customer acquisition and targeted our retention was like SaaS. So we're like, oh, retention, like month-over-month retention should be over 95% for 100% of customers. And that was actually what we were driving towards, which maybe helped us, because I think now we know for sure our retention rate is like very good relative to others, because we always measured ourselves against like SaaS because we thought that's what it should be. We're like, oh no, cost of customer acquisition should be like really cheap. Like we got to get it down. So this is all stuff like I'm happy to say, even though we're public now, but this was all stuff that was in like our public disclosure for our IPO, where we were giving like cost of customer acquisition and all this kind of stuff. So yeah, the summer of 2018 when we launched, we definitely didn't know what we were doing. We did not fully appreciate some basics like how difficult payment providers work, and we were coming more from SaaS e-com type stuff like Lou Market, for example, where you could just sign on with PayPal, no problem. You like and all these different things that are just like easy and just work. And I remember, I think somebody had told us, oh, PaySafe is a big payment provider on like gambling. So the only thing we had when we launched was PaySafe. We're like, oh, we'll just get PaySafe and like payments will just work for all like gambling everywhere in the world. That was a huge mistake. So it definitely took us from like the late 2018 launch into, I'd say, like Q1 2019 to realize what on earth we were actually doing here. We were also refining some of the marketing stuff where we were seeing some success because we were already starting to do influencer style marketing and a lot of things that were atypical, because we did not understand how big like the affiliate business was, the way other people were acquiring in the space. And we did zero of that. And we still basically do zero of that, to be honest. But yeah, we went more with Gen Z, young millennial consumer product marketing and not thinking about it as gambling. And maybe that framework, which wasn't, the tried and true playbook because we didn't really know it, in a way ended up being helpful by not knowing. Like we were going about it with almost like a first principles thinking, because we didn't actually understand what anybody else was doing at the time. So for us, it was cost of customer acquisition. I remember the first quarter or two, so maybe like Q3 2018 and then Q4, our cost of customer acquisition, we were spending very little money, but it was like hundreds of dollars. It was like $500, $600 or something. And then by the time Q2 2019 hit, we had gotten our cost of customer acquisition, including upfront bonusing, everything globally down to like sub $50, like under 50. And there were certain deals we were doing at the time where we were seeing like $10, $50 maybe. And that continued for years. So there was a lot of low-hanging fruit at the time for people that understood the demographic and how to access them. I think that even by today's standards, $20, $30 cost of customer acquisition for a FTD, including all upfront welcome offers, is like pretty good. So we were doing a lot of that for years, and it was becoming clear. And I say 2000, like mid to late 2019, definitely 2020 and 2021, that we were just grabbing a lot of honestly low-hanging fruit from industry that didn't yet understand how much there was available there. But that's what we felt we were getting there, and getting closer was on that basis.
Awesome. And you referenced the fact you guys are a public company now, and I just want to talk about that for a minute. Obviously, I'm sensitive to the fact you say certain things and can't say certain things, but I'm curious from your perspective as a co-founder and CEO, Steven, like how have things changed for you trying to build an organization as to start with a private company where you obviously have full latitude to make decisions as you see fit, and now as a public market CEO where there's guardrails, there's certain disclosures, there's obviously more visibility and eyeballs on everything you and your team are doing. Let's talk about like that shift for you and what that's meant in terms of how you had to change the way you lead and are thinking about growing the company.
I think early on when we were public, I maybe let it influence me a little too much in terms of, public optics management and the quarterly reporting cycles. And I think it's hard not to at the beginning because you feel beholden to the metagame of the market, I guess I would say. But if you look at the best public companies or like just the greatest companies in the world, it's usually from founder CEOs that are still there that lead it with I wouldn't say like an irreverent attitude towards the public market, but in some cases that definitely is the case that they have, but building as if you're not beholden to those constraints. And I think the biggest one for sure that I don't frankly think about at all relative to the way I used to is the quarterly cycles, because anyone that's ever built a company from scratch with like enough scale knows that 3 months, although you can get a ton done in 3 months, your 3 months is nothing. 3 months is essentially literally meaningless, because if you're a true founder and entrepreneur of a business that you believe in and care about, it is your life, as Rivalry is for me. You don't think in quarterly cycles. You think on, multi-year, a decade. How is the brand and the business going to build a legacy, the thing that you are pouring all of your life energy into, basically, right? So, but the market judges you on these like little 3-month snapshots, but they have no actual understanding of what is happening in the business in terms of the things you're doing and tunings internally that are being designed that will only bear fruit a year out or 2 years out. It's like a farmer. You can't judge a crop based on the planting. There's a whole growing season that has to happen. So that's the biggest challenge, trying to articulate that to the market, because also having come from capital markets, and I was a research analyst, and most of the clients I had were hedge funds who have very short-term holding cycles. You're talking to hold a stock for 3, 4, 6 months, rarely a year, unless they absolutely love it. I also appreciate that the incentive of public equity participants is to deliver returns in excess of their benchmark, and that's how they personally get compensated. That's their own personal incentive. And therefore, I'm not ignorant to the fact that the equity has to perform to have people interested in the things I'm trying to have bear fruit in the future. But I think that is like this extremely tenuous and almost impossible balance. But yeah, that to me has been the thing that I guess used to bother me and maybe shift my decision making in a way that was negative, and it doesn't anymore. But I think that is by far the hardest balance, because I think that last thing I'll say on that is what the short-term shareholders and equity participants don't appreciate is, by making decisions through the prism of 3-month snapshots, which is what they think that they want, because they want the stock to perform. So they want those 3 months to be amazing. By contorting your decisions to fit in those 3-month cycles, you're actually doing, in some cases, like irreparable damage to the actual long-term potential of the equity, which is what they actually should want.
Sounds like a perpetual tug of war in many ways.
Yeah.
Let's shift a little bit and talk about, I guess, modern times now that we're caught up on the history of Rivalry. I think one thing that sounds silly to even put it out there as a question, but my audience, I'm not going to assume, is completely familiar with esports. A lot of my audience is US based. I know you guys don't operate in the US market, and esports more broadly is basically non-existent in the US regulated betting market.
I was very comfortable with that, actually, maybe, because I saw PrizePicks did a deal with an esports odds provider, I forget which one now, and they said that CSGO, Counter-Strike is their 4th most wagered title. And PrizePicks, if you look at the app downloads over the last year, PrizePicks only has 5% less downloads over the last 12 months than DraftKings, and 3% less daily, which is crazy. And for them, Counter-Strike is the 4th most popular title, which to me, 4 could be a huge distance from 3 and a huge distance from 1, but still, that's decent. Yeah.
So let's pick up there. Give, I guess, the audience a bit of a primer on esports betting in general, right? What are the characteristics of esports that make it both similar and different from a betting perspective than the big 4 sports that most people are accustomed to? And I guess just as an extension of that, talk a little bit about some of the demographics and the profiles of your average esports bettor, the average person that would be playing with Rivalry.
Yeah, the last question, that's definitely shifted over the last 5 to 6 years. And I think also potentially why Rivalry, for example, is a business today over the last year or two, even year and a half, 50% of our total wagers is casino, and then, or even 60% some quarters. And then the difference being sportsbook, we're about 80-20 esports sports. So yes, within that 40% slug, we definitely are still a majority esports, but the business is now much more diversified, I'd say. Yeah, esports betting, just betting on competitive video games, and I think the way that I've always described it to people is, if you just abstract the video game component of it and any preconceived notion you have on it, you are just watching 2 teams play each other in a thing that you like, the same as you watch football or basketball or whatever it may be. You're just watching 2 teams play each other in a thing that you like, and you are wagering on that, and within that framework, it's the same. Like if you are an NHL bettor, and let's say you like to bet on who's going to win the initial puck drop as a market in Counter-Strike, which is a 5 versus 5 shooting game. So again, it's one team versus another, smaller, but one team versus another. The first round or the first moment of a Counter-Strike competitive game is the pistol round. So in that game, the players haven't played each other at all, so they haven't built up what's called economy. So as you play more rounds in Counter-Strike, if you're winning, you're getting more money. If you're losing, you're not getting as much money. You can buy more weapons, and then there's all the strategy around that. But the very first round, everyone's got basically 0, a little bit more than that, but all they have really is pistols, so it's like the puck drop. And Just as there are some players and some people that are better at the puck drop, there are some teams that are better at the pistol round, which is the equivalent of the puck drop for Counter-Strike, for example. And you can bet on that. Again, take out all the video game stuff, everything. It's two teams playing each other in a thing that you like. There's all the same types of markets, pre-match props, in-play, everything. The percentage of in-play versus pre-match is the same. It's like 70-30, 80-20 in-play versus pre-match, the same as you'd find in traditional sports. So these are all the things that are the same about it. I think the things that are different are not really to do with the betting, because there's as many markets, and again, it's fundamentally the same as I just described. It's more to do with the psychographic of the bettor. The demographic has changed, but the psychographics are somewhat similar, or some things about it that are nuanced are the same. 5-6 years ago, the average bettor on Rivalry was more in their early to mid-20s, and now they are definitely more in their mid to late 20s. So it has shifted, especially for a game like Counter-Strike, which has an older audience. It is mostly male. It's 80 to 90% male, which I think is not that dissimilar from sports, though, but it is that kind of breakdown. The one nuance that I'll speak to, because I could obviously go on for longer, is one thing that we've noticed about esports, and it was one of the reasons why during the whole esports franchise cycle, I was known to be like a very vocal person that, thought I was guaranteed to fail, as much as I wanted it to succeed, because it would just be good for esports as a theme in the world. But it was DOA when it first came out, all these esports franchises, because it made an assumption that esports fans, like sports fans, have loyalty to specific teams or specific cities or specific brands, which has never been the case in the history of esports. And there are some fans like that, but it is like the tiniest sliver. If you ever go, and all anyone had to do that was ever interested in those franchises, or is interested in esports betting and understanding, just forget the franchise. Just if you're trying to build a betting business and you are listening to this, interested in esports betting, the thing to know about the fan is they don't have that kind of loyalty. Just go to a single esports event yourself, and what you will find is you will find a group of friends sitting in front of you. You'll find 4 or 5 friends sitting together, and they will all be wearing a different jersey. And they're wearing a jersey of their favorite player. And they could be real loyal fan of a particular team where their favorite player is for quite some time. That player leaves, they don't care about that team anymore. And what you'll also find is, even where you've got like a group of people that are like diehard fans of a specific team, which does happen, and you do see it a little bit, for sure. The most diehard fans, like I'm thinking, this is going to be a bit nuanced for the audience, but there's a team called ENCE, which is a Finnish Counter-Strike brand. And the Finns it's not a very big country, and this is their main team, and they are very loyal to that team. And they will actually be flown out to events, and you get these ENCE kind of groups in the stands. Even then, when their team is losing, or if there's an incredible play from the opposing team that wipes their whole team, they will cheer because the play was so good. So there's two huge differences are the fans are very much fans of the individual player, not the team. They have no loyalty to the teams. And even if they do, everyone really is there for the gameplay. Everyone is a fan of the game. They are fans of the game of Counter-Strike, and they love incredible plays. So this is like a huge difference with the profile of the bettor as well.
Yeah, and just to speak to the esports events, I've been to a handful myself over the years. I got to check out, I forget what year it was, I'll say like 2019 or something like that. The International, which is the world's largest Dota 2 tournament every year. It was in Vancouver, which is a stone's throw away for me. And I got invited to go there, so I went and checked it out. I flew over, and I had no idea what to expect. I guess I'll caveat, like I'm not an esports guy. I don't really play a lot of these games myself, so I don't come from that background. So I was coming in with no real sort of expectation. And it was unbelievable. The energy in that building was unmatched to any live sporting event I've ever been to. To your point around just the fans, there were costumes, people were dressing as their favorite characters. It was a vibe. It was so cool. My one lasting memory of that is, funnily enough, the beer lineup at a live esports event is much shorter than the soda lineup, which I welcomed. But yeah, are those events like still attracting that same level of energy? I know esports as an industry has gone through some ebbs and flows the last couple of years. Is it still that level of enthusiasm still permeating as it did?
Yeah. So yeah, there has been ebbs and flows for the economics. So the Saudis basically own everything in terms of the biggest tournament organizers now. But it's the same branded events. It's still like IEM. It's still like the same brands that just got acquired by somebody else now. And if you show up at any of those events, you will get the exact same energy. Anyone that goes to those, who's been to traditional sporting events, comes back and says like the exact same thing that you just said.
Yeah, unbelievable. If anybody gets a chance to go, you absolutely should go. If nothing else, just to take it all in. You spoke a little bit about, Steven, just like the demographic and psychographic profile of esports bettors. I mentioned at the outset here, you were supposed to be at the Canadian Gaming Summit last month, where I was moderating a panel that was basically about this very topic, right? Like talking about what operators can and should be doing to speak authentically to Gen Z and millennial demographics. Again, you were sick. We missed you there. That was a big hole in the agenda. We carried on. We did well. But I want to give you the platform here to give us like a quick 3 to 4 minute monologue of basically what your key points would have been at that panel, right? What is it, just to elaborate on what you were just saying, what is it that you see as an operator as well, that you need to be doing or other operators need to be doing to really speak authentically to these demographics?
Yeah, I would start with the assumption that you still need to have the full product suite. So even as, again, we've seen our demographic age, adding casino, traditional casino stuff, Evo Play, whatever, like Evolution, Live, Dealer, like that stuff is super popular still among this demographic. So we can go off the assumption that you've got a product that has at least all the content, because they still are interested in the typical content, sports betting, esports, all the casino offerings, product, instant games, etc. But obviously that's just like the bare minimum that you need. So from our experience at Rivalry, we're definitely trying to do more and more of this, is you need the experience to be what we consider intrinsically entertaining to the user, because of the fact that they can't get content anywhere. They can't find a bonus or an offer from somebody else that is just as good or more enticing. And you can't just hope that you'll always be able to keep going toe-to-toe with people on best offer and some new piece of content that's going to work for that moment in time, and then it doesn't. You have to actually create consistent hooks within the experience. So for us, it's a few things. One, obviously, is definitely like the brand, like the top-level brand definitely still has to speak to the specific customer that you're going after. Nobody likes to go somewhere that feels like their parents' bank or something like that, or their parents' sportsbook. Like it becomes extremely obvious, and this is just consumer products generally for an under 30 demographic, nothing to do with gambling or not. You need to have a brand that resonates with the specific community that you're going after. Otherwise, it will seem like you're just the old person showing up trying to do the hey kids and look cool, and it doesn't work. And as everyone remembers when they were young, or if they still are, like you can smell through that in 2 seconds. There's no way to be in that older brand and show up that way and think that people are going to take it authentically. Like you do have to show up authentically as a brand, which does matter. In terms of the experience, if you were to go look at Rivalry, for example, there's a lot of Easter eggs and surprise and delight throughout the experience and specific user journeys that are not necessarily betting based, but are designed to just create entertainment within the experience. And just because we know you're spending time on our website, we're trying to reward that in some way. So, for example, the way that we present like our casino product, we call it casino.exe, and it's made to feel this like retro, older computer type feel. And there's a lot of different quirk in it. We've got a Microsoft Clippy type character that we use in our external branding and our marketing, and also you find on the website, which is like a naked pink sea creature that kind of talks to you and it gives you shit. We've layered into more of that by having original casino games. So Rivalry also builds original casino content that is not just, let's say, a typical slot. It's more of a video game-like feel that again continues to like layer entertainment into the experience. So making the games and the content itself specifically entertaining as well. And then even all the way through towards customer support. So we spend a lot of time on our support because we do find that a younger demographic does seem to come into customer support more, and they have just different challenges and issues than a more mature demographic. And then even when they get to support, we hire people, we build the culture of the support team to feel for that customer like it's someone else they're talking to within their community. And in some cases, we have literally gone to hire people to work for our support team that are from large communities that we serve. If you're in a Discord channel with your friends betting on League of Legends, Discord is a popular gaming chat system. We want going into Rivalry's live support to feel as if you're still in that chat, like you're talking to a friend or talking to someone that sounds like you and isn't just giving you this like very super supporting the customer and answering the question, but it needs to also feel like a continuity of that overall brand experience. You need to be creating like all those touch points everywhere, because the attention span level is much lower. Every successive generation seems to have a shorter attention span. Therefore, the desire for novelty is always going to be higher and higher, and you have to be able to meet them at their entertainment level expectation by like driving that through every single piece of the product. Yeah, as much originality is helpful, which is also why we built our own product as well, is we need to be able to weave all that originality in as much as we possibly could.
And just to stick with the brand building side of it for a minute here, Canadian Gaming Summit 2023, so a little over a year ago, I was at that one as well, as were you and a large part of your team. And you delivered a keynote there. I want to say it was like the last speaking slot on the last day. So of course, like by that time, people have punched out. But you delivered like what I thought was a total masterclass on brand building, and you basically described the entire sort of thesis that Rivalry has around building its brand. And there's really struck me, there's a lot of intentionality, obviously, with the way you guys have packaged it up and delivered it, but also like it really struck me like it really runs core within your organizational DNA. And I'm curious, Steven, like for you as a CEO, at what point did you sort of recognize this could become a competitive advantage? Because look, the reality is a lot of other operators out there, from a marketing perspective, really don't pay much attention to brand. They have like lists with they tick the box, but that's about it, right? They're not out there like really thinking critically about how to use brand as a competitive advantage and how to build brand in that authentic sort of way. And again, like I think you've really are the case study for that, and clearly that's now paying dividends for you. But brand building it's a long game. It's tough to measure. Obviously, then for a lot of other CEOs, they focus on more immediate KPIs, acquisition, retention-led ones. Just talk about like how, at what point you thought like building the brand would be your guys' competitive advantage or one of them, and how you've thought about permeating this through your organization as part of that core DNA.
Brand bears fruit over time. That's why the greatest consumer brands that anyone can think of has both. You can think of the most classic examples in the world, let's say Nike and Apple, where like obviously great products, and especially Apple, like great products that were one of a kind, highly innovative, but also brands that are kind of unbeatable in their category. It's like a 1 + 1 = 3 type thing if you can nail both, right? So that's what we do is you still have great product and crush everything else that's fundamental to running a great gambling business. If you could also combine it with a beloved brand that has super fans, then it is a 1 + 1 = 3 type effect, and it does have trickle down effect to retention rates and obviously cost of customer acquisition, everything. But the stronger the brand becomes. So I've developed my thinking about this more over the last year since I gave that presentation, and even some of the crypto stuff we've been doing, was rooted in more and more of this thinking. But I've said this elsewhere, and funny that I feel people don't say it out loud, but gambling businesses make money from their customers' losses. We all know this. So that makes gambling as a consumer business very strange. And I always challenge people, name one other consumer category or consumer business that has less alignment or more or has this kind of antagonistic, quasi-combative relationship with its own customer base like gambling. One person, I haven't got anything that comes close. One person said social media because they're selling your data, etc. That's possible for sure, but nothing is like gambling, where you are trying to get a customer to use your product where their financial loss is your revenue. It's not like a stock trading app where maybe people that were trying to YOLO into GameStop were getting pissed at Robinhood because the app was breaking because they wanted to buy the stock, but Robinhood ultimately wants their people using their app to have financial success because their assets grow and Robinhood makes more money. Like there's still alignment there with the product like that. Gambling is weird in the way that you're trying to get people to be loyal to you while they're losing money so you generate revenue. That is an extremely awkward, almost highly atypical, I think an only existing gambling dynamic. Which means that in a situation like that, the ability to create alignment through, and brand is a great way to do it. The ability to create alignment through brand by providing other value to them, as in like values to their community, values to them personally, the general feeling that people have with like camaraderie and relationship with people that are aligned with some kind of ethos that is tied to a brand of something that they're all using and some shared experience. That means that the benefit of having great brand execution in a business with that misalignment, such as online gambling, is asymmetric relative to, let's say you and I are running an e-com business selling pottery. Like it's not gonna, our customers are aligned because they like our designs. Like we're not necessarily need to create a super brand to sell our pottery to people. I think when people think about brand and gambling, one of the things they don't fully appreciate is the financial unlock and the leverage created through it being executed well as a function of the intrinsic nature of the misalignment between business and customer in online gambling. Means the benefit of doing it well is completely outsized relative to any other consumer category in the world, in my opinion. It's like all this type of thinking that led us to continuing to push on it as something that really matters and can continue to create like this long-term flywheel and leverage for us that gives us also the flexibility to do a lot more and be able to engage our customer. And the last thing I'll say on that is, let's just get more practical for anyone listening to this that is more of a nuts-and-bolts tactical person that isn't used to thinking about brand and creative, which I know a lot of people aren't, is if you are a hardcore product person, a hardcore product builder, what is the best way to build a great product is you need to be extremely close to your customer and have voice of customer in everything you do, and always be soliciting and collecting customer feedback and engaging them so you can build the ultimate product for them. One of the best ways to engage customers is have them actually care about you and care about your brand and be accessible, because you've fostered communities through your brand and everything you've done. So one of the practical benefits of a great brand is it gives you the closest possible ear to the ground with your customers, because they're immediately accessible to you, which means that your propensity to build great product in a highly iterative way, if you're a purist product person, is significantly enhanced by having also a great brand. So it has lots of these other benefits I don't think people fully understand.
Yeah, lots to unpack there. I'll resist the temptation to try. But clearly, as you say, your thinking has and continues to evolve on it. And the execution is second to none in this industry for my money. Again, Rivalry and its way that it's built brand and taking it to market is really unmatched, and clearly it's paying dividends for you guys now. Let's shift real quickly, Steven. You made reference to this a couple minutes ago. Rivalry recently launched a crypto token, which I don't know. I feel like in 2024, it's almost like a bit of a contrarian move now, right? If you asked 4 years ago, everybody was doing it. Just quickly talk about the story there, why now, and maybe again, just for context for people that aren't familiar, just quickly talk about what it is and the utility it has within the Rivalry ecosystem.
Yeah, so why now? What is we had seen lots of other people do it, and there was a lot of like legal ambiguity and uncertainty, and we're still a public company and we're accredited investors, and just we wanted to make sure we did it right. So there was some stuff there to declutter. Also the technology, when people were doing it back in 2017, 18, that was the first cycle. Some of them got in a lot of trouble for it. The technology wasn't yet pressure tested, and even from a security perspective, so it just wasn't clear that it was going to be a thing that was worth trying to innovate with at that time. So those things have progressed a lot. We felt Rivalry, before we would dabble a little bit more in that stuff, we needed our own kind of critical mass and a way we can actually engage our audience in something like this and be able to communicate it to them, which also just takes time. And then specifically what led us to it was we had reached the point where, again, we felt the product had all the minimum viable features that a gambling business needs in terms of providers, payments, everything really working. We were seeing growth, and we were seeing also increased interest in crypto in terms of it as a deposit withdrawal method on Rivalry, especially last year, started to ramp up. And then in the summer, we were just exploring more of this. How do we build more of an economy within Rivalry? How do you build for Gen Z and young millennials and having entertaining experiences and very like alive websites that feel like there's like an ecosystem there and something happening? So we were developing that thinking last summer and thinking, okay, how do we create more of an economy between our users? They're super engaged, and they're also engaged is held by having an engaged brand. How do we get them doing more with each other? Let's figure out a way to build more of an economy where users can maybe transact with each other. There's a lot of different thinking behind that. As we were developing that, we thought to ourselves, it's going to need some unit of value. Okay, let's go on with token tech, because it would be more interesting to have a unit of value that had actual, let's say, external value that people could validate with each other, potentially be able to take off the website, and it not just be like Rivalry gems that's completely locked on Rivalry and you could only ever use it on Rivalry. And it would just be, we thought it'd be compelling to be able to explore the idea of a token as a way of unblocking some of that local trapping that a unit of value that would only exist on the site would have. So we spent a lot of the back half of last year exploring that, doing kind of all the work on it. And then we did announce that we would be doing a token. And this actually, the reasoning behind it, because this will now be quicker to explain, it has to do with the alignment thing that I just ranted about, which is token technology from a purist perspective is completely designed to create more alignment between users of a product and, let's say, the providers or operators of a product. In the absolute maxi sense, the idea is actually for the user and the operator to be the same person. This, I think, has some way to go from that perspective. But the core ethos of the technology is alignment between users and product. And therefore, the same concept I said, where the largest misalignment in a consumer product, to my knowledge, is between gambling users and the gambling business. If token technology is a piece of technology designed to create alignment, we felt that if this could be a participant in that journey for Rivalry users, along with everything else we're trying to do, that the asymmetry in terms of user benefit we could create by trying to execute this, if it's successful, would be greater than executing it in any other consumer category. So if we can move the needle of alignment between player and house even 10-15% with a token, yeah, we think the potential upside of that is significant. And again, would be greater than Jesse and Steven's pottery business, right? Having a token. Everything just continues to feature into alignment, and online gambling being a uniquely kind of misaligned business with its customers. So all these things are just designed to help continuously solve that problem.
Nice. And when's the token launch provisionally scheduled for?
Probably later this year. We haven't given like an exact public date, but
Sure.
we said no, actually later this year, yeah.
Nice. We got a few minutes left here, Steve, and I want to shift gears here to take us home today. I want to talk a little bit about just company building in general, right? One thing that's really struck me getting to know some of your wider team over the last couple of years is just, I don't know, it strikes me there's very fierce loyalty that people have as part of the Rivalry team. They're very proud of waving the Rivalry flag, and clearly you've done something the same way you've built this brand for users and customers in the market. Clearly you've done something internally that's engendered this type of enthusiasm for working at Rivalry. And I guess just curious if you can share some of your core principles or frameworks perhaps for team building, and just talk about how those have served you in building the Rivalry org over the last few years.
Yeah, this would has to be a whole other hour podcast, so I'm going to have to just try to...
I got the time if you do, no.
Yeah, I'll have to, because I spent a lot of my time thinking about this, and yeah, I could go on for very long time, but I'll just pick one that maybe is the leading principle that for me everything I do trickles down from, which is maybe atypical. I have a whiteboard in front of me behind this beautiful background, and on it I've had for years, and it's like the one thing I don't erase. It just has, like, in quotes, it says mint founders, as in create founders at Rivalry, and everything flows down from that. And people who have spoken to me and even get onboarded will hear this from me, which is that if Rivalry as an experience and a place to work can do so much for your skill set and whatever craft it is that you're trying to hone in your career, that your exit trajectory from Rivalry, whenever you leave, as I don't expect people are going to live the rest of their life here, and I'm completely realistic about that, that whenever you leave, the incline of your exit trajectory has steepened so much that could not be achieved anywhere else but Rivalry, then I've done my job. And then I find that it is a million little things that come out from making that happen, but I find that makes a great culture where I act in a way where I want as many people to leave Rivalry and then start their own companies, because I want them to be able to have absorbed enough of a kind of skill set here. It's definitely a higher pressure place to work. It's not a typical 9 to 5, but most of them have absorbed enough from here that they're capable of doing that. We talk a lot about like craft here. Like, I want you to be around people and have your craft honed in a way that would be unlike anywhere else that you could possibly work. And me be like an advocate for you to do those things, and be an advocate for you to leave and go found a company and start, and not expect you to stay here forever. And I would love, like, my own success metric for Rivalry. Obviously, I want the company to succeed and whatever that looks like, that for shareholders and everybody else involved. But my personal one is I would love to have, to the extent humanly possible, my own PayPal Mafia equivalent. Is there going to be a Rivalry Mafia of people that leave here and do very notable things because of which was enabled by being here? That is, like, everything flows down from that for me. And then all the flow down stuff I could talk about for an hour, but that's the leading principle, yeah.
I love that. Actually, wouldn't mind scheduling an hour another time to go deeper on that topic. But another thing I want to quickly check in on here, clearly through this conversation, Steven, like, it strikes me you do a lot of thinking, right? How do you find time for that? I guess ultimately is what I'm curious about. Like, you're busy leading, you're busy executing, operating, answering to the market, all of these sorts of things. Yet a lot of entrepreneurs don't carve out enough space for themselves to work on their own professional development, to become an effective leader, an effective CEO, be the best entrepreneur they can be. Like, talk about what you do to position yourself for the best chance of success, which by extension positions Rivalry for its best chance of success.
Yeah, that's changed a lot over the last few years. I used to be more of an optimizer in terms of the whole cycle of wake up, get some sun, cold bath, workout, all that kind of stuff. I tried that on for a year, and I don't know if it was good or bad. Probably good for a minute and then bad. But yeah, I'll try to keep this one short to where I am today, because this answer has changed every year because I'm always trying to figure this out. I'd say one of the biggest things that I've done is silence and solitude, in terms of I will spend time every single day and I will literally sit outside and stare out into the sky, and I'm not exaggerating, and I just think. And I always tell people in the company that I don't think they realize how hard it is to think. As in, I always challenge people in the company, like, don't look at a screen, put your phone away, I don't tell people stare at a wall. I'm not joking when I say that. I said, if there's a problem you're trying to solve internally, I challenge you, without the itch to grab your phone or think about something else, think really, really hard about this specific problem you're trying to solve without anything in front of you for 10 minutes. Just see if you can think for 10 minutes. I don't think people realize you can get, in my opinion, basically like 10x leverage, and it makes you look superhuman to other people just by taking advantage of like silence and solitude to think really critically, uninterrupted. Right? It makes it look like you have a superpower when you don't. You're just thinking. There's like a Einstein quote that I saw in a book I read recently that I really liked, where he said, if I was given an hour to solve a problem, I would spend 55 minutes thinking about the question, 5 minutes solving the problem. Most people today spend less than 30 seconds thinking about the problem. They spend 59 minutes and 30 seconds trying to solve it and just like banging away all day. It is shocking the unlock people will have if they do the inverse.
Bit of an extension of that one, if you'll humor me on this. I know you have a young family, and as people that listen to my podcast know, as I've belabored on the last few months, I'm a new dad, recent new dad myself. And I'm personally going through the journey to try and work out the relationship between fatherhood and family responsibility with my own entrepreneurial ambition and different projects, et cetera, and like really reconciling that and figuring out how those integrate. And curious to have you speak to that, Stephen, from your experience. Can you talk about how you've done that successfully, ostensibly, and I guess maybe how having kids has changed your relationship to business and entrepreneurship?
Yeah, I have 2 kids under the age of 5. I'd say it took me a good year or so after my first kid to figure out how to manage it. I think a lot of it comes down to very similar to my last answer, which is you need to spend as much time focusing on one thing at a time and creating space to think, because if you create the space to think, then the thing that you're going to spend 60 minutes banging away at might actually only take you 10 minutes if you actually spend 10 minutes and think about it. And that compounds really, really quickly. I don't know if there's a rationalization. I know other parents have maybe rationalized the same way as I have. Because of the constraint created by kids, it is a constraint. There's just no way around it. Like, you're just going to spend less hours working. It's impossible not to. And it's potentially significant depending on your home situation. And that constraint is good because we don't have all the time in the world. You have to figure out how to get more effective with your time rather than just like brute forcing everything. But I find now, a few years later, my personal output versus before I had kids, so I was younger and had more energy, had no kids, and had basically no responsibility, versus now it's the complete inverse. But I probably am outputting multiple times per week what I was doing then, because I don't have all the time in the world. I have constraints. I have to think super deeply about how to maximize my time. But that's what's worked for me, is focusing on one thing at a time and making space to think how to best do a thing rather than just going and trying to do things all day.
Love it. You've dropped a ton of insight and knowledge bombs here, and frankly, a lot of value for other entrepreneurs and founders that are listening to this. If you were to crystallize everything you've done into one piece of generalized advice for other entrepreneurs that are building within the real money gaming space, is there one singular thing you can drop as something for them to take away from all of this and your experience that they can then apply to their own journeys?
Building a consumer product, do not discount the value of speaking to customers yourself, like you personally, as much as possible, in building that muscle across all your teams, where the voice of the customer isn't the only voice, because if you just listen to everything they say, you're going to also just build for nothing. Like there's some thinking you have to put behind it, but do not, in the hustle of trying to build a company, lose sight of who it is you are building for. And that is the most important person in the world. And that is more important than your shareholders and your board and anybody else. You answer to your customer. And the more generalized piece of advice from as a leadership perspective that I've also just gleaned from a lot of history and things I do in my free time from a reading perspective, but also my own experience and just people I've admired through history. I've noticed this is like the one universal trait that often isn't spoken of, and I think it's the same thing with CEOs and people in executive roles or any just senior role, is the ability to compartmentalize. What I mean by that is, when you lead and build a company, you will go from either office to office or meeting to meeting or Slack channel to Slack channel, whatever it is you're in, or some hybrid of all of those. And you'll be dealing with you're just a funnel for the worst problems, basically. So fire here, some personnel issue here, some other blow up here. And early on, it is very easily to get emotional, because you're human, it's easy to get emotionally disrupted by something where somebody makes you angry, and then that tails off your day, and all of a sudden your ability to focus degrades because you're just ruminating on that thing. It's easy to let that absorb everything, like all your energy. And I found like best people through history, what I've really focused on getting better at is you need to be able to compartmentalize things extremely well. You need to go to a channel where there is like a five-alarm fire, and you come in and you just like calmly, coldly execute what needs to happen. And it literally turn the next moment and go do something completely different as if that didn't even exist. And you come in with like a complete stable mindset into that next thing that you have to do. That's another way to get a lot more leverage in your day when you have little time.
Yeah, I feel like a through line here is something along the lines of meditation and stoicism and practicing those and then applying those to your day, whatever your day might bring. And clearly in your case, that, again, has served you very well here. We're at a full hour here, Steven. This is flowing by. This has been awesome. I really appreciate everything you shared with the audience here today. I think we could go for another several hours, so maybe we'll book a follow-up at some point down the line. But for now, man, really appreciate you joining me here today. Thank you so much.
Thanks for having me.